So welcome. This is our Genus Friday video. With me today is Mike Thiessen. He's our Director of Sustainable Investing. And Mike, let's just get right into it because it was a very interesting week. How did you see it?
So this week was interesting. There wasn't too many big macro pieces of news this week, but it all started out with Chinese state media saying that it's very important to foster a healthy bull economy or a bull market. And so investors took that as the Chinese government is going to basically help boost the economy. So the Shanghai index went up about 6%, and S&P 500 went up over 1% on that news. So that kind of started the week off with a bang. And then from there, news was kind of mixed. Some negative news out of Europe saying that their economic forecasts are coming in lower than expected. But in the US, the St. Louis Fed was saying that unemployment, they think, is actually going to be lower than expected. So positive there. And then, of course, mixed news around COVID-19, cases going up, but then some news out today, Friday, about some positive developments with the vaccine. So
great. So the market really took off on that news today. So Wayne talks about our portfolios being in our stocks being in three different buckets. And he talks about the winners in the COVID environment, which are the technology stocks, healthcare stocks. And he talks about the losers in the COVID environment, which are the industrials and materials, energy, banks, companies that are associated with economic output. And then he talks about the serious losers, which we just take our hats off to people who can play those, the cruise ships and so on. So he talks about this barbell strategy we have in place. So tell us a little bit more about that.
Yeah, so the barbell strategy is kind of focused on kind of having more growth companies and kind of more of the winners on one side, and then having some of the losers on the other side. So when the pandemic started, we really focused on the growth part of it, and we really boosted our portfolio, overweighted in those areas. But then now we're slowly moving into the past losers of the pandemic because the value is really good.
So when people get their quarterly statements, it's good to know that when you look at the dividend fund in there, that is the value stocks with the better yield and a little safer, but not the performers, not the winners in the COVID environment. The CanGlobe portfolio, that's where the technology and the healthcare stocks are. So that's the barbell. Those two funds represent the barbell.
Exactly.
And when you look at the market performance, if the news is bad that day, and earlier in the week when COVID cases in the US are going up dramatically, and not only cases, but death rates starting to go up too, and yields coming down, those are bad days. That's when the COVID winners have done well. And today was really an example of a turnaround where the vaccine got announced early in the trading day, and the dividend fund would have performed very well today, would have outperformed the CanGlobe. So it is a barbell, and it's more equally weighted now. The other big thing that happened this week was our Minister of Finance, Morneau. He announced that the pre-COVID budget of $28 billion isn't going to happen. It's going to be more like $300 billion. So what did the market think of that?
So for investors, it of course affects you negatively, given that the deficit's 10 times larger, as you said. And so the overall net debt for Canada is over $1 trillion, or it's going to be over $1 trillion. So $1.2 trillion is what they're expecting. And then that, of course, affects our debt to GDP ratio. So our GDP has, of course, been going down given the pandemic. It's expected to go down about almost 7% this year. And then with debt really skyrocketing, the debt to GDP ratio has went from about 30, which is kind of 30%, which is a good number, up to almost 50%. So it's really jumped significantly. And a large part of the overall increase in deficit is from increase in spending, the support for individual Canadians and for businesses. And then another big part of it is just lower tax revenues, just given GDP decreasing.
Shorter term, the dollar didn't really move very much. Are you surprised by that?
Surprised by that, but yes, but at the same time, everyone's going through something similar. So if you're relating this to other areas in the world, everybody's increasing their debt loads, everybody's GDP is going down. So it's not like relatively we're doing a lot worse than everywhere else.
So we're not ready to really get our arms around the elephant yet, but just FYI, we will be holding panel of expert seminars, probably 3-6 months from now, and try to get some experts in to tell us, where is the government going to get this money from, and where are your taxes going up? Because there's no doubt they will be. So we'll try to get some good experts in to talk about that. A client had a question. I'm just going to preface it with just asking you, we have a fund called the Impact Fund that, and maybe you could just describe what that fund is, Mike.
Sure. Yeah. So we have a fossil-free impact fund, and this fund focuses on investing in companies that are providing solutions to big problems around the world. So companies that are mitigating climate change, or companies that have healthcare solutions or education solutions. So it's quite an exciting fund to be a part of because it is quite positive. We're just looking at kind of the companies that are making a difference, and we really want, or we make sure that all of the companies are contributing towards a sustainable development goal. So these are 17 goals set up by the UN. They vary from education to healthcare to clean, affordable energy, zero poverty, things like that. And we want at least 50% of the revenue from the average company in that portfolio to be coming from a product or service that is contributing towards a sustainable development goal. So 50% of the revenue has to be making an impact.
Right. So with that introduction, now the question from the client is, what 2 or 3 holdings do we have in that impact fund that are helping mitigate climate change?
Yeah, so there's quite a few. So a few of them are Vestas Wind. We have Berkeley Group and Citrix Systems. So with Vestas Group, or with Vestas Wind, they design, they manufacture, they install wind turbines all around the world. I think about 18% of the world's wind turbines around the world come from Vestas Wind. With Berkeley Group, they're a green home builder in the UK. So the vast majority of their homes rely on renewable energy or really low carbon emitting energy sources. And then the last one, Citrix Systems, is a tech company that focuses on cloud computing. Most of the largest companies in the US use Citrix Systems in some way. So there's a good chance that all of us have used Citrix Systems kind of behind the scenes, and we don't really even know. But cloud computing is much more energy efficient than local computing. So just so because of that, we're using less energy and less emissions.
Great. Well, it's great to have the accountability in there. Come September, our clients will get in their September quarterly report an actual report card on how their portfolio looks on emissions and ESG scores relative to the indexes. So that's a needed addition, and we're excited about that. Well, let's everybody get at your summer weekend. The only thing this news today, I thought it was a treatment, but it's a vaccine, even better. I thought of what I read, I think it was from Dr. Henry, that it's better to get COVID now than in March, but it will be better later. So stay safe and have a great weekend. We'll see you next week. Thank you very much.
Thank you. Bye.